we tend to think of our own companies sometimes as a silo. We're here to do this and we're here to crush the competition, et cetera, et cetera. But I mean, the bottom line is, some of the stuff we talked about, right? Like leading indicators of problems in a market and what people are seeing in certain areas. I mean, that insight affects the whole industry.
Welcome back to ACS Portfolio Perspective. I'm your host, Andrew Pace, Chief Client Experience Officer at ACS. Joined today by Dominick Cevet, CLFP, Assistant Vice President of Portfolio Management at Auxilior Capital Partners. Dominick is a graduate of the University of Pittsburgh, started his equipment finance career in 2012 at Element Financial Corp., now PNC Vendor Finance, beginning as a collector and working his way through various roles, including customer audits and payment modification management, before becoming collections manager. There, he successfully managed a team of 11 collection specialists through the challenges of the COVID pandemic. In 2002, Dominick joined Auxilior Capital Partners, where he's built their portfolio management department from the ground up, now leading a collaborative team of 5 full-time collection specialists. He recently earned his CLFP designation, reflecting his commitment to professional excellence in our industry. When he's not managing portfolios at one of North America's fastest-growing independent finance companies, Dominick enjoys hockey, golf, and exploring presidential history and historical sites with his wife, Megan. Dominick, welcome to the show.
Thank you for having me. I'm very excited to be here.
Well, let's talk a little bit about Auxilior Capital Partners. Founded in 2020, has already scaled to over $1 billion in the portfolio in just 4 years, which is incredibly impressive. Backed by private equity and focused on vendor-driven origination in sectors like construction, specialty transportation, franchise finance, you've clearly found a formula that works. Can you walk us through how you've been able to grow so quickly in such a competitive space?
Yeah, would be glad to walk you through it. So the one thing I would just add is we're actually, as of right now, we're managing over $2 billion in assets. It's pretty exciting. So we have our construction space. We operate in the transportation and franchise space. And I think the real key to what makes us successful is those relationships. They run deep. So we develop our programs. We are hyper-focused with ensuring that we're managing our programs properly, that our program partners are getting the service they need, that we meet with them, on a regular basis so that we can always kind of benchmark where we are, where we want to be, et cetera. And so it's really just, our management team, Andrew, you know them too. Our management team, they've been in this industry for a long time. They have a lot of experience. They know what they're doing. And, they've built something that is going to be able to sustain itself. Because as I'm sure you know too, when you're building programs, there's a lot of time and resources that may go into building these programs. But once you see that finished product, that I would never say something like that business writes itself, right? But I mean, you service a deal properly and you demonstrate that you can, book, fund, and service a deal properly and with efficiency, that business is going to come back. And so that's kind of what, they've taken kind of a tried and true method that they've been able to deploy previously. And, they've kind of stuck it here. And there's some differences here. I will say the one thing, and when I was talking with some of your folks yesterday that I didn't mention, right? So one of the things about Auxilior that is really differentiates it, I think, from probably almost any company I've ever been at or any of our competitors for that matter, is we have an unbelievable intern program. And I was just thinking about that today because we were doing some work with some of our interns. And we've been able to bring in a lot of people that have stuck here. And it's such an advantage when you got somebody who's driven, they come in, they're here for a year. I'll tell you, most of our interns, like they'll be here for the summer and then they'll be coming in on their breaks and things like that. And it's such an advantage to have somebody basically that can kind of start on day one and they already know the ropes, right? So that's really cool to see, to be honest with you. I mean, speaking for myself personally, I mean, my department has really benefited from some really excellent interns that are now full-time employees. And so it kind of just goes to show, I mean, that's part of, our culture too, is like investing in your people, right? You can bring people in that are going to kind of work on monotonous type of administrative tasks, and then that's what they know. But if you take the time to teach them the industry and not just tell them what to do, but like why we're doing it and what effect it has on our business overall, it sticks better. And, the advantage to us and sort of the benefit we get, obviously, is, we just have a plethora of young people here who are doing awesome.
That's great. I mean, that's awesome. What would you say the role of your manufacturer and distributor relationships has played in your growth at Auxilior Capital?
Yeah, so the company, when it started in 2020, kind of from the ground up there, also starting a company during, a global pandemic was pretty interesting. Our chief credit officer was employee number one, and he kind of tells us stories about, how he came in here and he was sitting at a folding table and, nobody was on the roads, and it's kind of interesting to hear. But so it's interesting because obviously a lot of programs, your manufacturing partners and your dealer partners, it takes time to build that up. So it was very interesting for me personally when I came to Auxilior in 2022. I came right in the middle of all that. So it was there were two dynamics, right? So we were already booking business, with dealers that we already know and kind of had prior relationships with maybe, but at the same time, like I was here watching us build the programs that we now are kind of managing now. So, in vendor finance, that's what it is. It's relationships. It's about being nimble and being able to kind of adjust to the needs of vendors and program partners. And I think, that's a very big competitive advantage that we probably have because, a lot of these relationships that we have are deep and they're long. And we kind of have an idea already of what our partners want, but through, constant communication and follow-ups, quarterly reviews, things of that sort, what we also are able to do is find out what, how their business is changing, and then what can we do to help benefit them going forward. And I know another topic that we kind of talked about and stressed on a lot was the idea of us being an independent. It gives us a ton of flexibility to be really nimble. And the other thing about being nimble and being able to kind of say change course maybe on a dime at times when you need to is implementation. So we can take an idea that maybe a program partner has, and they say, hey, we would like to see X. And we say, okay, we're an independent. We get a few people in a room, we kind of cut out a lot of that bureaucracy, and we can probably make a decision, in a quarter of the time that a lot of other people would be able to make, just because we, one of these things, I guess it's kind of interesting. Like we're a very quick growing company, but we aren't bloating our company with staff, right? So if you don't have all that staff, what you have to do is you have to give people autonomy. They need autonomy to be able to make decisions. And so I will say that, the amount of autonomy we have around here has been instrumental in allowing us to kind of pivot, make decisions, and kind of take that kind of idea and deploy it where we're helping our vendor partners so that we can kind of maintain that competitive advantage.
Right. Obviously that kind of growth going from 0 to 2 billion in 4 years doesn't happen by accident. You mentioned your chief credit officer starting in a folding table to the beautiful office space that you guys currently have. Requires strong strategy, especially in volatile markets. Let's talk about one of those big strategic decisions your team made recently. 23 made the decision to pivot with regards to the distress in over-the-road trucking, a move that seems to perhaps have positioned you well, given obviously the distress that we've seen in that sector. What were some of the early warning indicators that led to that decision, and how did your independent structure enable you move quickly?
Yeah, so the trucking issue, over-the-road trucking in particular, was really interesting for me to see personally, because I started at this company in May of 2022, and that is the month when truck and trailer values peaked. So we were, doing a lot of deals on trucks and trailers, and I think a lot of people, and I'm sure you would have a even bigger market perspective, so to speak, on this. A lot of people were it was a multitude of things that came together, and I don't think anybody was necessarily ready for it, being the spot rates, gas prices, and then the values. I think the values is what really took a lot of people by surprise, with how the values not only increased dramatically during COVID, but how they came back crashing down in 22 and 23. So, like a lot of companies, we had to make some tough decisions on what we wanted to do, what we wanted to put the brakes on. And so we had to kind of, decide that maybe right now, until there's a little bit more clarity, right? I mean, it's not always about, there's some problems in that sector, so let's get out of it. I think a lot of the decisions that were made by probably, frankly, a lot of companies was, we just don't have enough clarity right now. We're not sure, like, when will these prices, when will they stop falling? When will the spot rate market at least stabilize where there's a level of predictability? There were a lot of things that I think just kind of almost force you to say that we don't have enough information, right? I mean, everything we do, every decision we have to make as a company is based on what information we have, and the information was just so unclear for a period of time. It was just really tough to make that kind of call. So yeah, I mean, we really that space was not focused on nearly as heavily. And what's interesting, I'll tell you now, and you may have this perspective too, Andrew. We initially, you would see a lot of the smaller fleet operators struggling in, say, 22, and then into 23, your 3 to 5, asset operator. Well, right now, even though a lot of that has stabilized to an extent, I'm a little bit surprised at the level of maybe some of your larger fleet operators that are struggling today. I guess I would have thought that they would have kind of, at this point, they would have figured out a way to navigate a lot of the challenges in the market. But I can tell you, even though we're not actively maybe putting as much of that business into our portfolio right now, there's still a lot of kind of insight we can get from talking to these operators, and that market is stable yet. I mean, it's still a struggle.
Right. What are a few other sectors that you pivoted to, and what did you learn from that transition in terms of, and broader portfolio strategy?
Yeah, so we still do operate in the transportation space. So we do right now. We do have a program where we do motor coach financing. So that's been pretty interesting because that comes with its whole, it's a completely different level of challenges. Maybe that over the road trucking doesn't. Like over the road trucking, you're dealing with spot rates, you're dealing with oil prices, insurance costs, repair costs, things like that. One of the interesting things is in dealing with motor coaches. One of the things you're dealing with in tourism is seasonality. So it's one of those things where this company always goes to great lengths to understand their market and to understand where the pain points are going to be so that we are prepared to be able to meet those pain points. So with respect to, say, motor coaches, we do know that there may be some customers that, during certain times of the year, their business is down. They may be coming to us and saying, hey, we're going to need a little bit of help during this, this 3-4 month period. Likewise, on some of our other businesses in the franchise space, also quite seasonality. So, or say quite seasonal, sorry. There's a lot of seasonality. So, during the winter time, we do see some programs where, the franchisees are not, they're not drawing in as much volume. And again, though, like having these long relationships with a lot of these vendors, we know this, like we're prepared for this. We know it's coming. And so when you have a level of predictability, so to speak, and it's coming, it allows you to get out in front of it. So you're not always kind of chasing your tail. So that's
like skip payments, right?
Exactly.
If somebody's, if obviously they're slow in the winter months, you can structure the loan or the lease around that predictability, and those would be months where maybe they're just making interest only, or it could be annual. You guys, I don't believe, do a lot of farm and ag equipment, but that industry, you see a lot of annual payments.
Absolutely.
So, clearly your ability to shift gears when needed is obviously a big part of the success at Auxilior Capital, but just as important is how you deliver that flexibility to your clients. Let's talk about service. Your ability, it's a major asset, being able to adapt, but it's just as important how you deliver that adaptability through a service-first approach. Your company has made service excellence a cornerstone of its strategy, leveraging independence to stay nimble. You touched on that earlier, making quick decisions and structuring creative deals. You've also begun incorporating automation to enhance delivery without losing that personal touch. How does that mindset impact portfolio performance?
I think in today's day and age, like if you are not maximizing what you can leverage out of technology, you're really going to struggle. And I can only use, I feel most comfortable using examples from my own department, right? So we recognized early on, like we'll take we do commercial and consumer lending. So we have a lot of consumer lending that is, it has its initial, we'll say, administrative challenges, just kind of getting deals sort of on the right track, paying timely, paying monthly. Sometimes there's some confusion. Customers may not get their first invoice. They don't know who we are, et cetera. So what we've done is we've done a couple things. On the collection side, we're able to kind of reach a broad audience through a weekly text message that kind of just says, hey, just reaching out, let you know your payments due, give us a call here. But I mean, that allows us to reach 600 customers, in an hour, as opposed to, dialing for dollars, so to speak. But another thing that we've done, which is kind of interesting too, is it's very common in the vendor space where you'll send out a welcome package. It's 10 years ago, that'd be something you put this big bulky package together, you mail it out, et cetera. Nowadays, a lot of times that's emailed. But the one thing about emailing it is we realize that like we email our invoices to our customers. And if the customer's not making the first payments on time, are they checking their email? So we said, well, we don't want to email this welcome package because if they're not reading the invoice, they're probably not going to read the welcome package. So we actually generate a welcome text that we send out twice a month to our consumer customers that just basically says, hey, you commence this new loan. You will get an invoice 17 days in advance of your due date, et cetera. If you have any questions, call us here. We have a portal. You can register here. And what that does for us is invaluable because it just eliminates touch points with us. So it's about managing volume without doing it in such a manual way. And we're always we're always looking at what the next thing is we can do that we can provide, great service. We can do it efficiently and we can do it leveraging as much technology as possible. And a lot of that it definitely stems from our executive team, in particular, our president of our company. It is a high focus. It is one of the top focuses of the company every year. It's extremely vital to our operations.
Yeah, that service first mindset clearly supports your client experience or customer experience, but it also reflects how thoughtfully you manage the portfolio. And with exposure to both commercial and consumer lending, your vantage point is even broader. Let's get into that. In addition to strong service, your portfolio, we talked about, it spans the consumer commercial segments, which gives you a unique view of the borrower behavior and market trends. What kind of insights have you gained by looking across both those segments, especially in terms of how consumer trends could signal shifts in commercial performance?
It's really interesting you said that because you were probably sitting in the room I was sitting in 2 days ago. When some of the folks from Equifax were saying how when it comes to things like fraud, that a lot of things that happen on the commercial side, they start on the consumer side as kind of a test case. So it's been very interesting for me because I have only for the first 10 years of my career in equipment finance, it was all commercial. Dealing with consumer lending has been really interesting. I will say that a lot of it's almost like from a technology standpoint, it can be a challenge because when you're trying to push everything to automation, email, portals, et cetera, there's a lot of people, and no fault at all, that just, they want their invoice mailed. They want to get an invoice in the mail. They want to write a check and they want to mail a check. And so it really, though, when I think about it, it actually just prepares us more for whatever is to come in the future here, because we're dealing with two completely different segments of customer base. And so we have to be nimble enough to say, okay, on our commercial side, here's how we're efficient. And on our consumer side, here's how we're efficient. And those two things may not be in any way related. You might have two different definitions of efficient when it comes to commercial versus consumer. So if anything, it keeps us on our toes, so to speak. We always are learning kind of different trends and things like that. The one thing I'll say, we have not really seen the impact yet, and I don't. It remains to be seen of what happens on the consumer side with the recent uptick in student loan default rates. That could be a major determinant on like how consumer lending kind of moves, because it's been so long now where there were so many consumer lenders that weren't defaulting on their rates that it's something we're watching, because
Sure.
especially the equipment you're financing on consumer, especially when you're talking about equipment finance. I mean, it may not be your primary, need, right? So it could be for recreational use and things like that. And so, yeah, I think the jury's still kind of out, but it's going to be really interesting to see what happens over the next, 6-12 months with kind of the uptick in consumer student loan defaults.
Gotcha. Yeah, obviously your ability to spot those trends and manage risk across segments is impressive, and it ties into something else that gives you an edge. We talked about your independence, and we can wrap up by exploring how that structure shapes your strategy. That kind of cross-portfolio visibility speaks to how your team uses data to stay nimble, but another key advantage seems to be the structure itself. How is being that independent lender influence your ability to respond to changing conditions, developing stronger vendor relationships, and remaining competitive against larger, institutions?
It makes all the difference when you are doing vendor finance, because your program partners and the vendors that you're working with, their needs and their situations are always evolving. So we have to be able to evolve with that. Like a great example I have is just very recently with one of our program partners, we had a meeting, and we're looking for different ways to structure deals and maybe affect some approvals and things of that sort on the front sales side, credit side. And some of these things that we've been able to, I guess, take from start to finish, I mean, you're talking weeks, whereas you get involved with the bureaucracy of some of the challenges in like the banking world where you're not an independent, and there's just a lot of regulation. And so part of every calculated decision you make then has to be, okay, well, how is it going to affect us from the regulatory side? And obviously not to say that we aren't regulated as a financial institution, but there's the level of decision makers shrinks a little bit, and the number of people that are involved in making decisions shrinks a little bit, so you can make decisions quicker. We have made changes in nearly every single vendor relationship, probably in the last 60 days in one way or another, right? And sometimes it's small, and sometimes it might just be one person making a decision. But I can say that we've been able to make some major decisions in very short periods of time. And, frankly, that's a competitive advantage. It just is.
No, in looking ahead, how do you see that independence shaping your strategic positioning?
So I think that it will allow us the ability to continue to grow with scope, but B, I think what happens too, kind of, since we're going to kind of wrap on this, you said I'll tie it back all the way to the beginning. So we've got interns here, and we've got really great young people here. We have a lot of people that don't necessarily have entrenched 30 years of experience in the equipment finance industry. It's a new concept to a lot of people here, and I think it's going to help us continue to attract talent, because people are going to see, hey, we saw this company and they're growing like crazy, and oh, you know what, we know somebody who works there, and they say it was a great intern experience, and then we have a lot of different I guess initiatives, you could say, that we kind of do too, that maybe we can do because we're an independent. Like we do every year we have an awards ceremony at the beginning of the year, and the companies, the executive team in collaboration with some of the other management here, they actually select winners, and they take a trip every year. I mean, they went to Scottsdale this year, and that's something that, frankly, like, you don't see large banks doing, right? And so you're able to kind of introduce different initiatives to incentivize your own employees, but more importantly, you're able to attract top talent, and you're able to bring people in that that care and that want to help this business grow. And so it's all integration. One thing I probably should mention is we're in an office, and in-office culture is really, really important here. And it's you've seen it. It's a very nice office. It's a very comfortable
Beautiful
office. And so, some of those little things, they add up. They add up big time. And so I just think that the company's poised to continue our exponential growth, because we have the pieces in place. We have the programs in place. And really, when you come in here, you can just see how people kind of integrate and stuff like that, and you can just tell they care.
Yeah, your owners invest a lot of money in their people, technology, and clearly the space for so your staff can come to a place where they can collaborate and be in a comfortable environment. Yeah, and you're right. I've been there, and it is a beautiful space.
Yeah.
So
get that joke about the boardroom, right?
Yeah, you're going to need a bigger boardroom, right? Dominick, this has been a fantastic conversation. Is there anything that we didn't discuss today that you wanted our listeners to hear?
I think we covered a lot of it. It's always great to speak with you and industry people who can give us insight, right? Because a lot of times, we tend to think of our own companies sometimes as a silo, right? And you can, we're here to do this, and we're here to crush the competition, et cetera, et cetera. But I mean, the bottom line is, some of the stuff we talked about, right? Like leading indicators of problems in a market, and what people are seeing in certain areas. I mean, that insight affects the whole industry, right? So, sure, I'm not going to come to you and say, hey, we want to know exactly how competitor A, B, or C are doing, but it's important for us to know, how we're doing relative to, say, other companies in similar, of similar sizes and that do similar businesses. And so it's really important, I think, for the equipment finance industry in general to find a way to keep their competitive advantages, but to also recognize that it's important that you have that bridge for information, because we saw it in transportation, right? It's an industry that can change quick, and communication's key.
Sure, you don't want to share the secret sauce or the secret recipe, but it certainly doesn't hurt to share some best practices. Without divulging too much information. But those things are extremely important. You're right, and that you guys are obviously you guys are part of a number of different associations. You're visible at the LFA. And other associations. You support those associations. You guys send key people from your organizations to those events to obviously brainstorm, try to get best, share some best practices, and obviously for the educational piece as well. Thank you so much for joining us and sharing your insights, your perspective on strategic pivots, service-driven growth, and unique advantages of operating as an independent lender really added a lot of value to the discussion. We appreciate your time, and we'll be watching closely as your team continues to grow and innovate in the space. Thanks again for being here. To our audience, thanks for tuning in to ACS Portfolio Perspective. If you found today's episode helpful, be sure to subscribe, leave a review, and share it with your network. We'll be back soon with more conversations from across the asset-based lending and recovery world. Until next time.